Welcome back. This is The Close. It's wonderful for you to join us. And on a day that we've had plenty of company reports out, almost too many to count, but we will do our best with our helping hand, Martin Crabb. He's CIO at Shaw Partners, and he's joining us live here at Barangaroo. Martin, yeah, what a day. What a day.
Yeah, cracking day. Yeah.
So where should we start? Can we start with some of the winners maybe? Cochlear.
Well, yeah, I think healthcare is the place we've got to look. So obviously you just had the CEO from Cochlear on explaining their result, and obviously the fact that a lot of elective surgeries have reopened, although that may change, that's been really good for their sales. So their sales beat most of the analysts' estimates in terms of the implants. We knew about the court case, they'd lost that. They raised $1 billion to help pay for that. And obviously everyone's now going to be upgrading, because if their sales were strong going into the end of the year and into July, people are going to have to upgrade their numbers for next year. So that stock was up 10. But I think the story is probably CSL. CSL's up 5%. It's a much bigger company than Cochlear. I think it made up for about 40% of today's gains in the market overall with CSL. So they're reporting tomorrow. They've guided already to quite a narrow range, just above $2 billion US. So that's going to set a pretty good tone. But everyone's getting excited about the vaccine with those guys because they're doing a deal with AstraZeneca. So everyone said, look, I don't want to be short this stock going to the result, because the result's going to be good. We know that. And also the company might talk up either plasma collections, which everyone's worried about, or also the vaccine. So I think that's a stock that's, if anyone's been short that, they've just covered that into tomorrow's result.
So back to Cochlear though,
Yeah.
I mean, it's deciding not to pay a dividend. They've acted quite conservatively on that front.
Yeah.
They raised capital early on in this pandemic.
Yeah.
Management spending big on R&D and was committed to doing so through the pandemic, keeping all their employees on board.
Yeah.
Full faith in the management to execute this as we start to see economies hopefully reopen soon.
Yeah, well, they were the ones that I suppose shot first, asked questions later when it came to raising capital. They were really early on. They said, look, we've obviously got this big outflow coming with this court case. It's all $500 million, right? So it'd be difficult for them to turn around and say, look, we've just raised $1 billion or $1.1 billion off our shareholders. Let's start giving it back in the form of a dividend, 3 months later, 4 months later. So I don't think that they would know their investor base very well, and their investor base is not like a bank. They don't own them for the dividend. They own them for the long-term growth. So I think the investors would be happy to see the balance sheet's now restored. We're doing R&D, we're stepping up the R&D, and we're stepping up market share gains, because that was the other thing about in the result. They have gained a lot of market share. That's one of the features of reporting season, is the strong have got stronger, right? So CommBank has got market share gains, JB Hi-Fi's got market share gains, Coles has got market share gains, and we saw that again today with Cochlear as well.
Martin, you mentioned the word bank, so let's get straight to it. Westpac, no interim dividend. Any surprises from that particular result?
Yeah, we were 50-50 on whether they do it. I mean, obviously APRA have now I suppose confirmed their guideline. It's, look, you can pay 50% of your profit. So we think they'll earn about $1 for the year. So we thought they could pay 50 cents for the year. Were they going to do that first half, second half? We weren't sure about that. So a little bit disappointed, and probably some other people in the market. Just looking for the full year, the most bearish analyst has got no dividend at all from Westpac. And the most bullish has got $1. So I think it's probably somewhere in the middle of those is right. But whether they did it first half or second half is probably a little bit of a moot point. But clearly some people felt that going to this result, they had the capacity to pay it, as do ANZ tomorrow. ANZ probably won't pay a dividend tomorrow. That's obviously taken the gloss off the sector.
I'm just reading some analysis coming from Macquarie saying that Westpac is pretty unlikely to be re-rated in the wake of this third quarter trading update, despite looking, you got to say, relatively cheap compared with some of its peers.
Yeah.
But it goes on to say that Westpac's worst looking trends relative to peers could be partly attributed to timing differences, which suggests their peers could face increasing headwinds over the upcoming periods. And just talking to the negativity around that sector in general, I mean, that will become the question. Is there value in the banks, or are the economic headwinds that we still don't know the full extent of which we just stay away?
Yeah, and how much of the deferral of payments actually turns into a problem? So, like in the US, mortgage delinquencies are 8.5%, but no one seems to be worried about it, because it's just people basically getting the 3 months off from the bank, or the 6 months off from the bank. So we've got that here. So what happens at the end of that period? Are they actually going to turn into defaulting loans? So Westpac actually added quite significant to their provisioning in the third quarter, whereas NAB didn't. NAB actually reduced their provisioning. So obviously people are looking at that going, well, maybe Westpac's got a bigger problem than some of the other banks. But our view is there's 4 major banks, 2 regionals. You don't need to be in the regionals, and you pick 2 of the 4. So The retail banks are Westpac and CBA. We prefer CBA because it's just a much stronger bank and it's gaining share. Westpac's losing share. And amongst the business banks, if I can use that, we've got NAB and ANZ. And again, we think NAB's outperforming ANZ. So we just prefer to be in CBA and NAB and not worry about the other two.
Let's go to BHP, Big Australian. Obviously, out today. We've got a quarterly update that arrived a couple of weeks ago, so no real surprises there. Anything that struck your eye in that particular report?
Yeah, the profit was a bit light on. I think we were looking for 9.4 and it came in at 9.06, which doesn't sound like a big miss, but it's $300 million, right? It's not an insignificant number. And I think the problems were mostly in the coal assets. Now, they've flagged that they're going to divest them. Who's going to buy them? I don't know. I mean, who wants to be putting their hand up and say, yeah, we're investing in coal, it's the energy of the future? I don't think so. So that was a bit of a concern, and also the dividend was a bit light. But I think there's a number of conference calls with analysts tomorrow. So there's one at 8:30, there's another one at 1. So this will be management coming out saying, here are our plans, here's how we're going to grow the business, etc. But it's very heavily skewed towards iron ore, right? So I think it's 80-odd% of their earnings are iron ore. So the outlook for BHP becomes more and more about iron ore than it does the other mining assets that they have.
And for the 5th consecutive day, Chinese iron ore futures are higher again today.
Yeah, okay. Let's just stick with the reporting season though, because it's hard to get through all the names. However, can we touch upon some of the smaller names? Monadelphous, I'll run through them in rapid fire. Was that a relief rally that we saw there?
Yeah, I think so. I mean, the stock's halved. It was $18 pre the coronavirus, and it got down to 8, and I think it's finished at 10 today. So look, that's a quality business, but it's just in a terrible industry, and the issue is, how much capex are miners going to cut. But as the results have come through, we've actually seen some miners actually step up and say we're going to do a bit more. So I think we might see a bit of as to use the Governor of Reserve Bank's phrase, a gentle turning point in the mining services industry. So Monadelphous obviously caught a bid today. And I think some people have been short that stock as well, so a bit of covering there.
And Money3 Corporation, we haven't had a chance to speak about that today. Do you follow the company?
Yeah, we do. And look, our analyst, Jonathan Higgins, wrote a note this morning saying, look, it was a good result, it was a beat, they're doing better, they're winning market share, etc. But the market didn't like the results, so the stock was off 5%. I haven't actually sat and read too much into that, but that did seem to disappoint some investors, even though we thought it was a good number. And
Vertius as well out today, and that disappointed. Just checking where the final share price ended today. Vertius Health down by 1.25%.
Yeah, it was down 5% at one stage. So again, that was one that just sort of stood out as being, well, okay, who's reported today? Who's done well? Cochlear, etc. Who's done poorly? I think Vertius Health was down 5, but if it's only closed down 1.5, obviously there's been a bit of a rally in the death.
Why have we not seen more of a positive reaction to the Coles result today? I mean, I know that the figures that came through weren't fantastic, didn't shoot the lights out, but they maintained their dividend, I think, or did they increase their dividend? I think they actually increased the dividend, and it's this consumer staples thematic that we've been so latched onto through this pandemic.
Yeah, I mean, it's obviously pretty well understood what supermarket retail trading was like, because basically just take the entire spending in the economy on restaurants and move it to the home kitchen, move it to supermarkets. So however many billions of dollars that is a year, just shift that to cooking at home. So that's kind of what's happening. How long does that last for? It lasts until the economy fully reopens and we start going out for dinner and so forth. So that's going to be a while. The issue with Coles is stocks run incredibly hard. Like, I think we've got a $17 price target, it's $19, right? So it's had a huge run, and this result was very well anticipated. Again, with the retailers, there's so much real-time data now, it's whether it's credit cards or foot traffic or whatever, you can kind of get a guess of what these retailers are going to do. So with Coles, that was a really good result, very positive, and the company's making lots of progress, but we kind of knew that already. So it's a bit like BHP, they come out with a number that's close enough and everyone just yawns and moves on to the next one.
We're debating about whether today was peak earnings season or maybe tomorrow. So we've already mentioned CSL. Another couple of companies that have had a very good day ahead of their results tomorrow, Brambles and also Domino's. What are you looking for from Brambles?
Yeah, Brambles, I think the estimate's looking for just above $500 million US dollars, so 509 I think is the consensus number. So that's been down, having been downgraded for quite a while. So think about this company probably 3 years ago was making 800 million. So they have been downgraded a fair bit, and they're obviously quite cyclical, even though they're in the consumer staples end of the market. So that number's there's quite a lot of crowding around that number. So a number either side of that could move that around. Domino's is the other interesting one. They've had, I think, 5 updates to the market since the since the start of the coronavirus. So they've tried to keep the market pretty well informed as to what their result's going to be. And again, they're I think there's quite a lot of bunching around on. I can't remember what the consensus is on Domino's, but that's been one that it shouldn't surprise too much because the management's been kind of keeping us up to date.
147 million in profit, 173 million next year. A2 Milk is a big one as well.
Yeah.
Interesting as well, now that we've got a little bit more friction between Australia and China today, as being evidenced in TWE entering that trading halt as we've got China action against anti-dumping. I mean, can we draw a line between those tensions and A2 Milk?
Yeah, I think you can. I think infant formula is another heavily imported product from Australia, and this seems to be politically motivated. It's difficult to see how you can dump Grange. I mean, how can you dump Grange?
Maybe down your throat.
389 or something. I think of ways to get rid of it, but jumping in China is probably not one of them. But infant formula is another sort of key export. They have targeted, obviously, barley and so forth. And the wine today is obviously aimed at Canberra. It's not aimed at Treasury Wine Estates. They're just caught in the crossfire. But A2 Milk, again, that's another company that has provided guidance and they've been pretty forthcoming. And that's going to be a strong result. I think it's New Zealand just under 400 million. I think New Zealand is what they're going to report. So that's going to be a good result. But yeah, you can't rule out infant milk formula being targeted as part of the Beijing v Canberra battle. So there will be, and that's another stock like Coles that's performed incredibly well. You might see some people take some money off the table with that one.
Nor can you rule out the threat potentially when it comes to travel and tourism. Unfortunately, that's a very, very big industry for Australia that leads us to Crown as well out tomorrow. Obviously, expectations will be pretty low. We've seen no international visitors, particularly from China, arriving the last 5 months or so. Yeah. What are you looking for in that result?
Yeah, I think it's going to be pretty much half what they earned last year. I think they earned like 350, 360 mil last year. It's going to be half that, so 170, something like that, and probably not lower next year. I think the market's got lower earnings for them next year because it just depends on when the casinos open up, not just to the overseas market, but just to the local market, and obviously this thing being built next door, which the market's ascribing zero value to. It's going to cost them $2 billion by the time they've finished it. I had a look at some broker reports. A lot of analysts have got zero value for it, so it's not worth zero. It's probably not worth $2 billion either, but somewhere between the two. So I think for a lot of it with Crown will be, what do they think? When do they think the markets are going to open up domestically? And then, more importantly, the high roller market, is that ever going to get back to where it was? Are Chinese high rollers going to come to Sydney and Melbourne casinos?
Not if their government puts pressure on them not to.
No, exactly.
So there's all those sort of geopolitical tensions as well bubbling away in the background. We had the Democratic National Convention being held, so there's US politics that we're keeping in mind as well. But when you guys are sitting around in your morning meetings, presuming they're the morning, and you're talking about reporting season thus far, what's the kind of commentary?
Yeah, I think like most reporting seasons, it starts off well. So we've had a beat rate that's probably above expectations. Will that continue to persist into the second half? I mean, it is getting polarised. There's winners and losers, and this is classic economic theory coming out of a crisis. Is the strong get stronger, the weak get weaker. So if you look at things like AMP, Bendigo and Adelaide Bank, Lend-Lease, they had bad results yesterday and the stocks continue to do worse today. That's a theme that we're seeing. So people are just saying, why am I owning this stock? There's clearly a winner here. It's Commonwealth Bank. Why do I need to be in Westpac? And that's really sort of polarising. So we're calling it dispersion, and it's not just dispersion in profit results, it's dispersion in share prices. So today's a great example. Healthcare stocks, big healthcare stocks up 5, up 10. You go to the banking sector down 2 or 3. These are big market cap moves that we're seeing.
Yes, growth has been thrashing value for the best part of a decade, and at the moment it certainly seems in this case in the earnings season. What else have you got your eyes on? No, there's so many other things out there besides earnings season. What's caught your eye at this point in time?
Yeah, I think we're going to start focusing more on the election. I think it's looming. Americans don't tend to think about politics until Thanksgiving. So not Thanksgiving. Wait until is it Labor Day? I think.
Yeah, Labor Day. End of summer holidays, and that's the thing with even the market performance in the U.S. through the overnight. We're forgetting that they're on summer holidays.
Yeah.
Volumes have been anemic.
Yeah.
Things don't kick up until the first week of September.
Yeah, and everyone's going to start talking about that, and that's the issue. The other thing we're starting to think about is what's next year going to look like. A lot of these outlook statements. I mean, companies are trying to talk about the second half of this year, but markets are forward-looking, more forward-looking. So are we going to have next year 7% GDP growth in the US or 5% GDP growth? because of the amount of stimulus that we've had. And are people going to start focusing on that upside? Because this year's all about how bad's the downside, and is the second half going to be any worse? But, you know, are we as investors going to start saying, well, okay, I'm going to get 10% earnings growth next year or 15% earnings growth. Yes, it's off a low base, but still, that's a good story. So I think the market will go from being probably cautious and bearish at some point in the next 6 months to being more optimistic about what next year looks like.
Maybe tonight, the S&P 500 came within a whisker of setting fresh closing highs overnight. Maybe tonight will be the night.
What are futures telling us so far?
Futures are flat at this stage, so it's indecisive, but obviously where it ends up is the most important factor. But no, been a few probes above into record territory the last couple of nights, but no winner this time, but maybe tonight is the night.
Hey, just a final question, Martin. Yeah. When we talk about the tech names here in Australia, so we've got WiseTech that will be reporting, you know, obviously lots of focus will be on the buy now, pay later space. I mean, is there any sort of tech thematic locally that you're looking to leverage off of? We have EML Payments, for example, reporting tomorrow. Not pure tech, you know, it's payments, but I'm just curious. I feel like the WAC stocks haven't been getting that much attention lately.
Yeah, I think it's mostly been on that buy now, pay later space as opposed to, I mean, Altium reported some reasonable results the other day and reiterated their guidance, although they moved it back a year. So still looking to get 500 million in sales just from just under 200, so that's a good growth story. WiseTech's another one that's been a little bit bipolar. That's been up and down all over the place. It'll be interesting to see what they report tomorrow. But the afterpay, that's really, we're seeing with the credit card data that buy now, pay later is continuing to grow at about 30% per annum. So that's a real momentum story. But the issue with these guys is, when will they ever make money? They sort of have to keep investing in new markets, a bit like Amazon or Tesla. Is there a profit out there somewhere for these guys? Because a lot of them are just continuing to lose money.
Yeah, and I think to your earlier point, from a lot of these types of companies, even Tyro Payments today, we've been getting the updates coming from these companies.
Yeah.
Even Kogan, has been providing plenty of business updates throughout the year.
Yeah.
That's what we like, isn't it? Although it does risk disappointment on the day.
We certainly have heard plenty of good news out there in the last, when those companies, anyone who's had good news to report has certainly been doing it. So maybe it makes that bar a little bit higher when it comes to actual earnings.
Yeah, it gets harder from here, I think. Yeah.
Well, thanks for joining us for today. We look forward to tapping into your knowledge and expertise this time next week, Martin. Really appreciate it.
Thank you.
Thanks, CIO of Shaw and Partners.